Olaf, fantastic to get you on Real Vision. I can't believe this is the first time you and I have ever talked.
Yeah, I know. Seriously, it's long overdue.
Yeah, absolutely. Listen, before we get in, I'd love to go a bit back in time. I know Ash covered this in the past, but I'd just love to hear your story because you've got a great story. So let's start from the beginning. You started as what, employee number one at Coinbase? In fact, what were you doing before Coinbase?
Yeah, so it actually doesn't start there. So I first found out about Bitcoin in 2011 and got just very obsessed with the whole concept. I was going into my senior year of undergraduate studies and wrote my thesis on Bitcoin. So this was in 2011, 2012. I graduated in 2012 and basically cold emailed the thesis to the Coinbase founders. From there, joined as the first employee, worked at Coinbase for over 3 years, mostly as the head of risk, then left in 2016 to launch Polychain, which I'm still running today.
What gave you the idea of starting a hedge fund? Because you obviously knew absolutely nothing. You were, very young. You'd never run a large book, and talk me through that whole process.
Yeah, so that's absolutely correct. What I knew very well was crypto. So 2016, I was really immersed in the Ethereum ecosystem. I had been tracking Ethereum for a long time. I had met Vitalik Buterin in 2013, and so knew him from a long time back. And, the main thing was I felt like the traditional VCs that were investing in the crypto landscape, there weren't that many at the time. There were just a couple, but they were really caught on sort of a traditional venture model where they would buy equity in companies. And those companies were sort of infrastructure providers like Coinbase to the crypto segment. But at that time, Bitcoin represented about 95% of the market value of all cryptocurrencies. And what I realized is I had a lot of friends, people who were in the crypto space, developers, protocol architects, people working on just a bunch of various sci-fi projects. They didn't have a company model. So Ethereum is a great example of this. There's no Ethereum Inc. or Ethereum LLC that you can really invest in. There's no Bitcoin Inc., right, that you can go take a position in. If you want to invest in a new protocol system, you actually have to buy cryptographic assets directly. And I noticed this huge gap in the market where people wanted to build new crypto systems. This was way before the word DeFi was invented, but people wanted to build DeFi systems. And the investors didn't really have a good mental model or sort of legal, operational model to invest in those projects. So I set out to do venture investing, but into cryptographic assets and protocol systems. So there doesn't need to be any sort of business or company or equity model behind this. It can be simply an agreement for a token, an agreement for some sort of cryptocurrency. And it required, designing an entire firm around the ability to hold cryptographic assets, participate in peer-to-peer networks with those assets, and of course, legal contracts, right, to execute these types of deals. And so I launched Polychain in 2016, basically saying, I'm going to build a real crypto fund, right? Not a venture fund that's sort of looking at crypto as a segment. I really think it's the wrong framework to just sort of view this as, another category in tech. I think it's so much bigger than that. And if you want to invest here, you really need to build an entire firm that's capable of doing that across everything I talked about. So that was kind of the opportunity I saw in 2016 and what led up to launching Polychain.
And at that point, there was probably only you and Dan Moorhead?
Yeah, I mean, there was DCG, Blockchain Capital, Pantera. Those were basically the three firms. And, all of them had a really traditional equity model, and all of them really weren't paying attention to Ethereum. And in my opinion at that time, there really was a huge lack of awareness on what was happening with smart contracts, programmable money, these early concepts of DAOs, early concepts of DeFi. This was pre-NFTs, but, of course, things like NFTs. So really just the whole category of sort of protocol investing and a belief that we could do more here than just hard money, which is huge, right? It's almost hard to imagine back then how much the focus was just on Bitcoin. Nowadays this concept that there's more than one digital asset is like obvious. Everybody knows that. I called the firm Polychain because I wanted to take that contrarian bet, and I wanted to embed it in deeply in what we were doing, all the way to the name, that this is going to be a world of multiple digital assets. There's going to be value accrual in different categories, and that, there's place for multiple blockchains to all coexist, because there's trade-offs, in the design of all these different systems. Some of them might be designed for expressibility for developers and scalability. Others might be designed more for, never changing. Sometimes I call Bitcoin the cockroach protocol, and I mean that in a good way. Like, it'll survive anything, right? And that kind of polychain approach at the time was like extraordinarily fringe, even inside crypto. So you've got to imagine those early fundraising conversations. Even in crypto, it felt like what I was doing was a bit crazy. And then outside of crypto, it was like I might as well have been speaking Arabic, right? It's talking about Ethereum and smart contracts, and this is back in an era when people who were allocating to funds, they were still struggling to understand the basics of Bitcoin, and so then to really wrap their head around what I was doing was another leap into the abyss.
Firstly, what portfolio did you choose to start with? What were the first projects you kind of got involved in? And then even the simple question is like, how the hell did you administer this? How did you store the stuff? Because this is early, right?
Yep.
And a multi-chain world was not particularly common.
Yes. So, man, I had to do a lot myself. So luckily I had a very strong background in security and in storage of digital assets, both because I'd been doing it personally for many years, but I also was one of the people on the Coinbase team that created, a patent for what we called the Coinbase Vault, or the name is the Bitcoin Host Computer System. And so I'd been involved in a lot of the security design, of the Coinbase assets from the beginning. And Coinbase was operating at this retail scale. The really tricky thing about that is people are constantly, withdrawing money, depositing money. In a fund model, you don't have nearly as many fund movements, right? So you can do kind of a more cold storage approach for more of the assets, right? You don't need as fast of access. So amazingly, I designed the entire storage mechanism for all our assets from the beginning. And we used that mechanism that I designed for over 2 years. So I scaled the storage mechanism from, when we launched, we had about, $4 million under management, scaled that up to over $1 billion under management, until we finally started to get these qualified custodians to come on board and offer this institutional custody. But that was, it was a different era, right? Every time you made an investment, I had to spin up a new storage mechanism for that given asset. And if we ever wanted to trade it or buy more or anything like that, we would always have to interact with this relatively bespoke cold storage system that I designed. So it was tricky. Getting also fund administrators and auditors on board was very tricky.
Did you have outside capital at that point?
Yeah, we had a very, very small amount. I had some money from people I knew inside crypto, and then sort of a couple, early believers that were people I met and didn't know before I launched Polychain. But it was, it was kind of a ragtag group of early investors. It definitely wasn't, institutional grade at that point. And, getting the fund administrators, fund auditors on board was really hard. We didn't launch with Big Four auditors. Now we have that. We didn't launch, the fund administrators. I was kind of explaining to them how to do private key signing to prove assets. And I do remember, though, that those kind of first audits, first striking the nav, the service providers I was working with said, wow, this is kind of great. Like, This is actually easier. We don't have to go through this like third party who writes a letter that says, yeah, they have the assets and all of this. You really just provide like this mathematical proof that is unforgeable. And we know you have the asset. So it was, relatively speaking, once they wrapped their head around that, we got it working. But it was very tricky to get it off the ground. I mean, back then, to be a fund manager, you had to be like a technical crypto person. You couldn't just rely on service providers, again, to do what I was doing. If you wanted to hold digital assets, which of course was, the premise of everything I was doing, you really needed to have that technical background.
The cryptoverse is an incredibly exciting place, and it's going to be absolutely massive. This has been just a small taste of my own personal journey into crypto. Join me for free over on realvision.com/crypto as we discover just what this new world will look like and much more.